Hey everybody, welcome back. We have a lot to go over and a short time to do it. S&P unable to hold. I'm going to just pop these in real quick and we can see right there we broke the 22 again. We broke the 12. I use a 55, a 22, and a 12. The RSI is rejecting the 50. Pretty much the exact opposite of what you want to see. We have a ton of earnings to go over, and they're really important, and we're going to have to watch these, and you're going to have to watch them tomorrow. It's one of the reasons why this video went out late tonight. So this video is going to be short, sweet, to the point, and packed with information that will be actionable for tomorrow specifically. Now you can see how you're setting up right here, and this is highlighting something I'm about to show you. But you can just see, all we have to do is make sure that we hold this level tomorrow, 43.30. If we don't, the floodgates are going to open. I'm going to drill into a 1 minute. Now, before we get into the trend, we're going to talk about this 1 minute. What happened at 1 o'clock? Well, this was the bond auction. I'm going to say this again, and if you've been following us for some time, we've been talking about the bond auction and trading around the bond auction. These bond auctions are going extremely poorly. This is why you're seeing movement in the 10-year. Now, while this is thin, you can see at 1 o'clock, they started buying the 10-year. And then the ES started to rally. They started to sell the 10-year. And what happened? The S&P 500 rolled again. I can't stress enough how important it is right now. We're going to get into it on Saturday. We're going to talk about earnings yield on Saturday. So make sure you subscribe to this channel if you don't already. It's going to be a pretty big lesson on earnings yield and why we're in this trading range. We're going to go through, for those that are familiar with the stool, we're going to go through the macro side of this and what exactly is happening. So you can see how we're going to rally here, then we just fade. We were going over this earlier with somebody that I was talking to that trades the futures market, and that's your 200. And it's pretty interesting how the 200 was just respected all day long. Maybe something that we should be watching tomorrow if you want to trade the futures market or just get a bead on the market and what we look like. Now let's clean this off and let's drill into the hourly and take a look at what we can expect as support and resistance lines. I think it is increasingly clear that this is a head and shoulders now, and this is just an hourly chart, but I think this is pretty glaring at this point. Whether you want to use this breakout or you want to just use over here, I don't really care. For the way that I look at the world is I would use that opening from the gap up, then the rally, this being the left shoulder, head, right shoulder, and I'll just point that out that you can just see left shoulder right here, right shoulder, and then of course this is your neckline, and you can see all that right in there. So now the question is, what do we do? Well, we need to watch this like a hawk tomorrow because this was anything but a pretty close. Now, if we pull down on this and we just slide back just a little bit, you can see the DTL or downward trend line. So there's always patterns within patterns, and we always want to pay attention to those so we can see what's going on. We see that DTL, and we were discussing this in the pre-market, which, this was actually the other day, Tuesday, where we did this, and we talked about that, and that it's going to be an issue. So we had to watch that DTL, and look what happened to it. That was pretty much it, kiboshed, and that was the end of it, or as we like to say, matumboed, and then it was over. So we want to watch this. We want to watch the world go by. And we don't really want to be doing a lot and no sudden movements. We certainly don't want to commit a lot. Let's get rid of these drawlings here. And now we're going to see this pattern and this dreaded head and shoulders that people have been talking about since June. And you can see that right here. And you can see the left shoulder here, the head and the right shoulder. And here's your neckline. You could draw your neckline a little bit more up here if you really wanted to, but I'm going to get rid of that. But you see where I'm at. You could draw that in there, but I'm going to leave it there on the break because I think that's more significant. And you can see how we respected it. So I'll just leave it at my line is better. And we'll go from there. And you can see we're making these lower highs right here and how we're unable to lift. And what are we doing? Lower high, lower high, lower high, lower low, lower low. Does this mean we're going to roll? No, it doesn't, but it does give me concern and it does give me pause. I think the most glaring thing that we have to look at is this. And this is one of the things we've really been hammering home. There's two things we've been hammering home in the community. Number one, you have a declining 55. You can't be feeling warm and fuzzy about this right now. You can't be feeling great about this at all. It's good to know people listen. Thank you, Steve, for the drawing of what warm and fuzzy is supposed to look like. And I can tell you right now that this chart does not look like that. So if we're sitting right here and we're unable to break, what do? Maybe we consolidate. All right, well, we're going to look at the sectors in a second, but we have a ton to go over. So how do we get through tomorrow? Well, to get through tomorrow, which is really what I think you have to focus on, we have to go into the NASDAQ. And then we're going to clean up my 1,000 lines for a second, and we're going to pay close attention to a lot of things. The number one thing that we're going to pay attention to is this DTL, downward trend line. And we're going to see how we respected that, and we're completely rejected, or as we like to say, matumboed here, 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 and now here. Now, what we've done is we'd like to be above the 55 for at least 3 times in a row to see change in trend. 1, 2. That's it. The roll tries again, 1, 2, and then under here you've been under that 55. This is in charge, not this. Now I have a declining 55-day moving average on the NASDAQ. Again, I'm not going to do the drawing again. That should not make you feel warm and fuzzy. You now are breaking and rolling as of today back under the 50. Okay, the 50 on the RSI. Now, as I like to say, I trade what's in front of me. I try not to predict. The way I was looking at the market was that by the end of the year, we could be at highs. We're going to have to see something happen here. I did not have 2 world wars on my bingo card, and one seems to be getting a little bit worse, doesn't it? There really doesn't seem to be an end in sight to it. So if you could just see the way that this is setting up, it's not setting up to be great. Really troublesome for me are a couple things. Number one, this just looks like it's just going to rip, meaning this, the 10-year. It just looks like it's going to absolutely explode if we take everything off, and you see how this is acting. It looks like we're heading right to that 5 1/4 level. And I think that that's something that we really need to pay attention to. What does the market do? Well, the market's fair value is a lot lower if we get to 5 1/4. That's why we're selling off the bond market. We're going to get into that on Saturday, not in depth today. But you want to watch this tomorrow, and you want to watch anything that is a bond auction between now and then. More troubling is the amount of sell-off and the just complete lack of the VIX. Now, a lot of people like to say, well, the VIX is different this time. Nothing's ever different. So it just means it's not doing what you want it to do. And if you think it's different, it wasn't different back here in September and October. So why wasn't it different then? And people will say, oh, the option market changed. The option market did not change. People still have to hedge everything. You have this here, you have over 30 here, you can't even get over 20. Right? This is telling you that if we roll, this will be significantly worse than we think it is. That's what it's telling me. This will be significantly worse than I think it is if we roll, because you don't even have panic yet. We're not even seeing any panic. Now, the earnings market in and of itself is something that we really have to pay attention to. I think we should start with Lam Research and kind of go from there. So I'm going to clean all this off, and then we're going to talk about ASML for a second. But Lam Research comes out tonight, and I'm going to just give you the short and dirty. You can go and read these all yourself later, and we can cover some of them on Saturday, especially Tesla. But you start looking at this and going, that's not a bad quarter. Well, it was guidance. Guidance was off. I didn't think guidance was that bad, to be completely honest. You're coming right to a support level. You're going to have to see how we act tomorrow. But overall, this was not a great read, and we're really going to have to pay attention to this and just see how it plays. But I'm not seeing them talk about we're getting demand for more product, which means that Taiwan Semi, and you can see when Taiwan Semi is supposed to come out, they say Thursday, but that's actually this evening. So when we come in tomorrow morning, we're going to have a surprise Taiwan Semi. The problem with Taiwan Semi is if Lam Research is not getting more orders, if they're not getting more orders for more equipment to build out for Taiwan Semi, that's a problem. And that problem falls with the AI names, the AMD, the NVIDIAs, those kinds of names. ASML, I can see why they would be slower. I could see why they would be slower. And that made sense for me, even though that this was a good quarter that they were talking about things slowing down a little bit. And you can see the miss right here on the revenue side, and they just cost cut to get where they needed to be on the earnings front. But you're sitting right at a key level, and you can see this right here, and you broke that demarcation line. There's not really much to say there. I tried to trade in this today, pulled a little money out of it. It was a really tough market. The better market to trade candidly was after hours, and we'll get to that. But if we look at how this is playing out and what's going on here, and then before we even get into more of the individual names, let me just show you this, because I'm trying to get you as much actionable information as possible before we open tomorrow. And to me, there's a lot out there that you should really be paying attention to. Number one thing that I'd be paying attention to is financials. These should have rallied. Morgan Stanley was not that bad. And what did we do? We made a lower low here. So you have a channel right here, and you made a lower low. Let's take a look at where that happened. Okay, so that happened right at the 22 and right as you were getting to the 55. Remember, we went through this yesterday. I look at the world like this. 55 is institutional support. 22 is what? 22 is, are the bulls or are the bears in charge? That's where you're at. 12 means, do I even want to do a swing trade? With us breaking the 50, no. I would tell you to be looking at FAZ tomorrow. I would be looking at this tomorrow. Let's clean off all my nonsense, and let's just look at this for what it is. Let's get rid of the 12 for a second, and let's get rid of the 22, even though we're above it. And just look at that from a standpoint of having 55 and going, do I have institutional sponsorship that wants to short financials here? Right, that's the question when you're up 55. 55 is curling up, RSI is over 50. I would be watching this tomorrow. If we fall apart tomorrow, and I'm not saying we're going to, but if we do, you might want to take a look at this. This is a very appealing spot. This is a very appealing turn and something I would be paying attention to. All the financials came out. I did not think they were that bad at all. I actually thought they were fairly decent. What we're seeing is we're seeing them rally up, use earnings as what? Supply, reject, and start breaking the 55. I can't see anything in JP Morgan's call that would make institutions want to sell. Bank of America can't get over the 55. Goldman can't get over the 55. Has the mother of all H's here, and it's breaking down. You're about to break 300 tomorrow. This is not a great quarter for these guys. Morgan Stanley had a great quarter, in my opinion, until the CEO spoke and started talking. But overall, this was great. I mean, him and Elon should probably take a class on how to give a conference call, frankly. But you can see how you're breaking down here. I would look at those names tomorrow. Now, if you want to just go and take a look and say, okay, well, who rallied the most and who sold off the most? XLE's rallying the most. You're seeing that because the tensions are heating up overseas. The question becomes what names make the most sense. Exxon flipped the 55 today. I told you we'd be going through a lot. Look here, CVX. Look, flipping the 55 today. You're going to want to watch these names for trades tomorrow. That's where I would be. I would be looking at the domestic super majors. I wouldn't play games with the secondary names. The tankers had their move. This was something we did in the room. We'll put about $2 in it. I would not be chasing the tankers up here. They're already starting to look a little weak. So I'm not so sure I'd be chasing those guys. But I think that the super majors, if this continues, and it looks like it's about to get worse, candidly, I wish it wasn't, but that's what it's starting to look like to me. But I'm no political expert. You can comment below, and I do appreciate you commenting and sharing these videos. I do want to talk about what's going on with XLY and how it looks like it's finally going to break. And I would start looking at some of these names as shorts. This is something that we've been focused on in the community for some time. And some of them are really starting to break down. Bookings was one that we were talking about shorting. I didn't get it off. Other people in the room did. And it's already down like 200 points. But I didn't put an alert out or anything. So I usually put lists together, and sometimes they find ideas. I can't look at everything. There's 8,000 stocks out there. But this is what I want to go over. This is troubling to me. If we lose XLC, all bets are off, because then we don't have anything. If we lose XLC over the 55, we have a problem. Look at XLK rejecting the 55. Yesterday we were over, today we're under. You're at a crossroads, and people will say, well, this was obvious. This is not obvious. There's nothing about what's going on right now that's obvious. There's nothing about the bond auctions that's obvious. There's nothing about these geopolitical events that are obvious. And this is when people get burnt, when they start saying this is so obvious. I've been doing this probably close to 25 years now. There is nothing obvious about what's going on right now. And if you think it is, you're delusional. So what you have to do every day in this kind of environment is make a decision to either commit to understanding what's going on, all the nuances, everything else, or stay out of the way. Because it's just going to be one day when you come in and you're not prepared, you don't understand why the market moved. You can see it coming, and it could be up or down, vicious. But there's a vicious move out there. Somebody's wrong. And right now, the way this is shaping up, it looks to me like the move's to the downside. I hope I'm wrong, but that's what we're starting to look like. So Tesla after hours, we have gone through how to do this trade I'm about to walk you through in these videos. So in these videos, I have taught exactly what these guys did in the room tonight to make an absolute, in my opinion, killing on Tesla. So Tesla's earnings came out this evening. They were a disaster. Why the stock went up, I have absolutely no idea. They missed on the revenues. Their operating margins were an absolute disaster. Their gross margins were nowhere near where they were supposed to be, and they missed. They couldn't even cost cut, and they couldn't come close to revenue. We rallied up. What I have told people to do here, and I would suggest that you do, if you want to trade after hours, which is actually a lot of fun, you want to watch and put a VWAP right on the first bar of after hours trading. And then you want to watch how all the participants and how they're all acting. It's exactly what we did. Started shorting here, made some money, lost some money here when it ripped on me. You can see that bar right here. I'm not the only one that does this, guys. So you can see that bar. So I lost money into there, immaterial, stayed with it, did nothing up here. And then here, what you're looking for is a system that you can use that is repeatable. The person that's going to tell me they shorted up here, they can't repeat that. I can repeat this over and over and over again. And that's what you're looking for. Something that is consistent, and then you can repeat and you can do over and over again. That's who makes money. It's boring. So see how you crack right here? You're just using the high of that bar, and that's it. And then down here, I started covering the majority of the position. I'll show you the timestamp on that. And that's why this video was late. I was trading and just watching things after hours, but let me just pull this up for time's sake. And if you can comment how raw this is, I appreciate it. But this is us. I'm not going to show all the alerts and all the conversations in the other rooms. I closed a lot of the short into 2:30, but I just want to show the timestamp so you can see that I actually did do that. Now, why is that important? It's important so you understand that you can see the timestamps, you can see what we're doing. I showed live trading video yesterday. Obviously, I'm not going to be live trading 12 hours on a screen, but for here, it just made sense to me. It was ridiculous how much that we were up, and I trim all the way down. But when I start seeing these kinds of neck breaks, I'll tend to hold and ride that wave down. You can actually count across to where that moves down. We can do that in another video. And once you know where you're at on the anchored VWAP, that's it. Now, the other side of the trade for me was Netflix. This was extremely easy. If you were mapped out and you knew exactly what you were looking for, which was subs, as soon as the subs hit, nothing else mattered. So when you start looking at the earnings and you're going, okay, well, they really didn't beat that much cost cutting. But if you knew that additional sub number and when they beat it and you knew they beat it, that was it. Now I'm going to show you something here, and this should be really important to you. Here is the anchored VWAP. Right? So let's say that you're not buying this bar because you don't want to be that guy. Right? And we've gone through another strategy where you can buy the flip of the first bar here and then use that as a stop. That's a strategy people use this evening in the room, and about 15 points. But you come back down and you retest that anchored VWAP, and then you bounce off that anchored VWAP. You could use that. You could use this as a stopper in there. It doesn't really matter. This works. It is consistent, repeatable, and you can do it over and over again. I did lamb. I pulled out a buck, but it was just too thin. And then obviously it just came in. This is the sleeper for me. I did not think it was that bad of a quarter. Now, why I'm showing that is you have conflicting data when you walk in tomorrow. You have Netflix that looks like it's just going to rip people's faces off tomorrow. Okay, everyone's going to take their numbers up tomorrow. Everyone was expecting the worst. Why? They fired their ad guy going into it. The CFO told you to temper your expectations going into the call. He completely set everybody up. And then he just ripped it. And that's exactly what happened here. And that's what we have to understand. So tomorrow, expect this to trade up. Look at these levels. You're through all these. So now you're talking about that neckline, which is 399, at 55 is 405. I use a 55, a 22, and a 12. You should use what you find most valuable. NVIDIA is sitting right on the precipice, but you're rolling and you broke the 50. This does not make me feel warm and fuzzy. I get asked a lot where this can go to. There's zero reason this can't break and get to 366. All right, so just understand that. I have a long-term position. I'm not going to wind up doing a lot with that long-term position, but I can tell you long-term, like I'm looking out years, but I can tell you right now, if you think you can't get here, you can get here fast. And if you break 366, you'll gap fill. You'll go to 302. That can happen. There's very little doubt there. You saw the first cracks today with Citigroup and them coming out with their, we're not really going to downgrade it. What we're going to do is we're going to lower our target price. It's like a really wussy way of actually doing a downgrade, and that's what they did. SMCI, still holding above that 55. I like the way that one looks. I still like the way this AVGO looks as it's hanging in here. So it's not just the semis look bad. Some of these semis are holding in there, but you're going to have a battle tomorrow. And I think that the battle for me is really watching the Metas tomorrow, watching the Googles tomorrow, and watching how they act. See how you're above the 12, the 22, and the 55? See how Meta is as well? They're both XLC leaders. If they can give us leadership because of their balance sheet, we have something to work on. The wild card overnight that you have to focus on as a trader tomorrow is look at Taiwan Semi and look at what they say about orders. If their orders are off or their bookings are off, as we get out there and we go into it, you're going to see NVIDIA and semis come down, and that means the NASDAQ's going to crack. That's it.